consolidating on the higher time frame. It's been creating a slight bullish order flows, but this is basically a consolidation. This basically means price consolidation means price is building liquidity. The institutions are generating a lot of liquidity because many retail traders are looking at this as a beautiful support. I'm going to buy here, I'm going to buy here as usual. So in the long run, price is just creating liquidity, tend to run through either one of the ways. So on the higher time frame, first thing I can see is that this supply, you can refine this on a lower time frame to get a supply. Look something like this. This supply has failed. So right now supply has failed, demand is in control. And if you go to a lower time frame, you will actually see that this high to this high is actually a range. This is your protected high and this is your liquidity low. Price has invalidated that protected high in the higher time frame. Now price is shifting bullish, as we learned in our previous lessons. Now, what can you see? So now there is one reason why price is going to shift bullish, but you should always build a story behind why you're going to take a trade. This shouldn't just be the only reason why you're thinking, okay, price is going to be bullish, I'm going to look for buys. This should be the only reason. You should build a whole story behind it. So now I can see there is a strong inefficiency over here, right? Building a story is extremely crucial. There's imbalance over here. So we can see the price wants to fill it. And another thing I can see is that, look at this. There's resistance over here. There's a lot of retail traders literally placing a bunch of stop loss right above here. So my prediction, not my prediction, like I'm assuming that price wants to move up and grab liquidity right above this high. This is in the long term, so in probably next few months this is going to happen, but obviously we wouldn't know. But we are intraday traders, so we don't need to catch this entire move. We are just going to catch these tiny moves inside here, and it will make us a good amount of money. So right now, so now we have build our long-term direction story where price wants to move in the long run. Now, since we have built that, now we can move to, let me just put this another color. Now we know basically price wants to fill this imbalance and grab this liquidity above this resistance, and price has broke structure right above here. So let's move now to the 4-hour time frame. All right. So in the 4-hour time frame, what do you see? First thing that I see is this swing high has been broken. Price has broken the structure. And yeah, so far, let's see what happens. All right, so price is shifting bearish right now. So now we can find which demand zones in your 4-hour time frame is still your high time frame is going to hold. So obviously there is, let me just take this off first. There's a bunch of demand zones as we can see. We have demand zone over here. We have a demand zone over here. We have a demand zone over here. There's a bunch of demand zones. You obviously wouldn't know which one to pick. So now, what do we do from here? As we learn in our supply and demand lessons, higher probability demand zones always lies in the discounted pricing model. Obviously, because many institutions are looking to buy at discounted price and sell at premium pricing. So all of these are premium. In this entire price range, but one thing I forgot to mention is this is a whole range right here. From this low to this high is one range. This is your protected low, and this is your liquidity high. Price shouldn't break below this protected low. If it breaks below, that means we are shifting bearish again, as mentioned. And as we know, price are fractal, so this is a range. This is one more range with your low time frame protected lows and highs and all that. So in your high time frame, your 4-hour time frame, this is your entire range with your protected low being here and your liquidity high being here. So now we have a bunch of demand zones. Which demand zones do we look to buy from in your long-term direction, obviously? So this is where you use your Fib tool and find which demands lies in discounted pricing model. So as we know, these two demand is in discounted. This is not. So I wouldn't look to buy. This demand zone is out of the question. I'm not going to buy from here. So we have these two demand zones. All right, beautiful. So these our higher time frame buys are going to be from either one of these demand zones. We have to look at confirmation to confirm which demand zone holds. So now we know. This smaller. So now we know. All right. So from either one of these demand zone, price is going to hit, react from this demand zone and move to the upside, filling this imbalance and this resistance in a higher time frame. Now, what can we do from here? Obviously, we don't want to be waiting because we're intraday traders. This is going to take like few days to happen. So let's move to your lower time frame. Let's move to a 1 hour and see how can you capture. As we learned in our lessons previously, price is fractal. So you can always look for trades, look for counter trend trades. Even though your higher time frame is bullish, your lower time frame can turn bearish, and you can look for sells, as we learned in our fractals lesson. We can still look for sells, counter trend trades all the way down to this demand, or possibly even down to this demand. So let's move to our 1 hour time frame. Now what do I see here? I see price trending to the upside like this, creating ranges, protected low, protected highs, this range, and this entire range. Why isn't this one range? Because this didn't break above this high yet. So this is not considered a wall range. This entire thing is considered the wall range. And what happened? Price broke. This is your obviously your protected low. This is your liquidity high, right? As we learned. So what happens? Price invalidated this low. Now we know on the intraday time frame, like the 1 hour, price is shifting bearish. So that is our first story. Now we know our intraday time frame price wants to shift bearish. So you're like, okay, so now I'm going to look for sells. I'm going to look for supply zones that will hold and take price to the downside. And another story is that we know price wants to fill all this imbalance, grab all these liquidity lows, and mitigate this high time frame demand zone as we mentioned previously. So now, which supply will hold? Let's look at it. Let's let price play a bit first.